Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for the day. It is Friday, April 4th. Please give me a like, give me a subscribe before we get started. As a thank you, as always, here's a very cute animal. It's a bunny this time. All right, shall we dive into the charts? Let's do it. Okay. So, what's been going on? Well, since yesterday, where were we? We were right around here. I believe so. A little further. Right there on that one. Anyway, yeah, so we were there. I was saying 82 looks like it would need to hold, and it looked like it did. It held up. We actually saw bounce up to the 200 moving average here on the 90-minute chart. You can zoom in a little bit. And now price action has come back down, actually bouncing off that 82K support level a little bit. And looks like it may be putting in a higher low, reversing this trend, this small downtrend that we were having. Possibly. Although this bear flag is a little different now. It's been, because we got a new high there. We got a new low even. And what we can do more so is even, put it like this. If that low can hold, that'd be great. And this pole can even come down a little further. Say that was the real move there. There you go. So now our bear flag looks more like this. Our W pattern is still here. 1, 2 double bottom. And like, you can see it there. I drew it out. Is this, what do you call it? Sorry. This bullish divergence here is also still in play. Nothing changed there. This bear flag, however, if it were to play out, let's just, take the measured move. We'll do it from where we're at. Down to 76. Closer to 77, which is where March lows. Well, what we have to stay over in order to, maintain hope. Anyway. This other blue line, if you recall, that's the extension of the double bottom. You find that by going from the bottom to the top of the middle section here, the middle upswing, and then moving that over to the shoulder level. And then that would give you the measured move up, the extended move up on the double bottom, because the double bottom usually plays up to where it started. And then from there, it has the chance of extending up, an extended move. Anyway, so that's what we're looking at here. We're looking at, I would say, 2 bullish signs, 2 bullish patterns, 1 bearish pattern. We can be a little more bullish on the shorter term, but remaining pensively bullish on the shorter term. So like 60-40 onto the bullish side. See that the Stokes have kind of stopped moving sideways. The RSI has kind of started curling back to the upside. We'll see if the RSI can come back up. Stokes can turn around, then hey, that's great. We'll see this RSI move up. We need to see it put in a higher high to show us that, hey, price action is going to continue up and complete this double bottom pattern. If, however, we don't put in a higher high here on RSI, well then expect price action to also not put in a higher high, but then also to expect, maybe this bear flag to start playing down or some more sideways movement. Oh, you know what? Let me do this, because if anybody's watching on their phone, I know I don't get too many views yet. If anybody's watching on their phone, I should get used to kind of putting this up on the old full screen there. There you go. That way people can see it on their phones. Double bottom. 1, 2. Measure moves up there to 94. bear flag, measure move is down to 77. That's the extended move to 94. The simple move is up to 88 again. Now, that's a move we want to see happen, though, because if that does happen, well, then we move over to our 6-hour chart. Let me make it big for you. The 6-hour chart, we are still looking at this bear flag. It's a long flag, short pole, long flag. But yeah, if we can get up to that 88 area, then we're flirting with the 200 here on the 6-hour chart as well. Let's move this fib retracement out a little. There we are. Yeah, so if we move this, if we don't need to move anything, just the fib retracement. But yeah, we're still in this bear flag. We're right on the lower edge of it, risking coming out, you know. If we do come out, we've come out once before, well then the move down to 77 is likely. That could be that would be our last saving grace before we dump further down this measured move. How far down? Well, as far down as 68K. This won't happen all at once. It may take, you know, several weeks, just like this move down took. But yeah, we're hoping that we get back up to 88, break that 200, then break this 90, invalidating this bear flag and clearing that from our mind. We've been talking about that for a while. Let's manifest it. Let me be a little woo-woo. Let's manifest that. It's going to do that. It's going to go up. It's going to break over 90, and it's going to you know, invalidate this bear flag. And if that happens, well, that's awesome, because then we're even more secure in the reversal of the trend here on the daily, which has been, let me make this big, which has been to the downside, since February, well, late January actually. Let me extend this fib retracement as well. There's a shift happening. Is that what he said? I believe it is. And there does seem to be higher lows. Let's see if we can get this higher high. We need to break that 90. That'll give us this higher high that we need, breaking us out of this downtrend, this downward wedge. Downward wedges play into upward wedges. If it takes about the same amount of time from January to the beginning of April, well, that's like 3 months. Well, okay, it's like 2 months and a little bit extra. So 2 months and a little extra from here. That would be about June, sometime in June. So expect the top of the reversal trend if it happens. You know, like I said, a downward wedge usually turns into an upward wedge. So yeah, if we can get that higher high, and some more higher lows, could even come a little lower at that point, still get a higher low, come up, and then sometime in June, that's like May, but still, that's like May. Could be a little further. But yeah, if we have a good month, could be May. Looks like good news is pushing the market up. President talk jumped up, but then it sold off. Any good news may push us up, but that also means that any bad news may push us down. But yeah, we have this divergence. We've got the downward wedge, which is a bullish pattern, and we still have this bull flag. Lots of bullishness still here, but we are under the 200, and we are still at risk of maintaining this downtrend, coming back down to 77, at least on the short term. We come this way and then come back up. Or, of course, we could come this way and not come back up. And this, you know, we would come back up, you know, but maybe it'll head down from here. 77 breaks. Our bull flag here is broken. It's the same as that bear flag, just in reverse. That 786 is down here at 77. If that flips, we can count this bull flag, this big one, as broken, invalidated. All right, let me get rid of all my doodles. But yeah, hopefully it doesn't break. And we can see this, measured move come back up to about 115, put in a new higher high and tell us, hey, game on, man, let's keep going. Although at 115, I'd be very skeptical of keeping going. I would probably take a little profits. Again, not off of Bitcoin, but off of the alts. Why do I look at the Bitcoin chart then? Well, because the Bitcoin chart tells us where all the other charts are going. All right. Thank you so much for watching. Music courteously provided by Sax, Squatch, Velo, and Luminist. You guys are awesome. Hit that like button. Much love. See you later.